Hello, trading has closed on January 25th, 2024. We will start with the disclaimer as we always do. We'll go over our calls. We'll make some predictions. It's my trading plan for Friday, which is January 26th, 2024. Please trade at your own risk. My calls can be completely wrong. Also, I have personal business tomorrow afternoon. I'm going to be far less aggressive than I normally am with my trades, since I might not be around to close out any position which goes against me. So I'm not going to be risking large amounts of my own money on these calls. And I'm not going to be risking large amounts of money and holding them through the weekend because I won't be around. Well, we look for the pattern with the early high. That's this. Tomorrow should also have the early high. We said that even though it's normally a negative pattern, this one tends to be a rally pattern, and that the late low didn't have to be lower than the early high. Well, this late low was lower, but it's still the normal pattern, but it just wasn't a bearish pattern. We actually traded up 25 handles. But again, what counts isn't where we close, but where we open. And if we open way down here, gapping down in a straight line, that's the normal pattern. That's what normally happens. And as we'll see, that's entirely possible, although it certainly isn't a lock. We also had an optional target 48.9750. We hit that, not exactly on the nose, but pretty close, within one handle. We said it should print at some time. It just didn't have to be today. It doesn't mean it wouldn't be today, and it was. This is just a reminder of what we had to say. We had all the things we needed for a top. All we needed was confirmation. Confirmation was moving down in a straight line. That's not what we have. We gapped up smartly, so the idea was killed, but I don't think this changes anything. Here's our close. We had this big rally. We couldn't take out any of these earlier highs. In fact, we gapped up, hit a higher high, closed under intraday highs. That's a bearish pattern. Now, what counts again isn't how we close, but tomorrow's open. And if we open up here, all is forgiven. But for right now, that's a rally which didn't accomplish anything except backing and filling, and the wall into the close will very often gap down. Futures are already down as I'm recording this. We did have this drop which MEJT said wouldn't stick, and it's already retraced. Here's part of the reason I'm concerned about the short-term picture. Here's a reversal bar involving the upper Bollinger Band. All we need is confirmation by getting follow-through to target a challenge of the lower band, and that follow-through hasn't come, might never come. But until this is invalidated by going over this high, that's what I'm considering the active pattern. Just needs confirmation, which we don't have yet. We stopped right at this trend line. If we're going to continue higher, that's not where you want to stop. Our wave count is still a valid count. Nothing's changed it. Doesn't mean it's the right count, but there's no reason to change it yet. Still have this as a ending diagonal triangle. The target's to go down to the origin. We now have a diamond on stilts in formation. Here's your stilt. There's a clear diamond. Pattern doesn't have to go to completion. It doesn't have to complete. But when it completes, which is often, not always, you get a stilt-like move down, targeting the origin of the left stilt. That's over 30 handles lower, about 35 handles lower. Now you can't count on that happening because it doesn't always complete. But we started there in futures, and if it happens, it should be the confirmation of yesterday's turnaround, and it should lead to lower prices, but not necessarily in a straight line, because often the first challenge of the origin of the left still holds. Doesn't have to, but often it will. And the next challenge, if and when it occurs, tends to break in grand style. So until we invalidate this formation by going over these highs, this is still a topping formation. We use the mixed signals rules for tomorrow. The pattern has yearly high, doesn't tell us where we open. Signals are mixed because it's bullish. Today's normally bearish pattern wasn't. Now remember, we gapped down tomorrow, and this is the normal pattern. It is bearish. We gapped up at a higher high. We closed under intraday highs. We also stopped right at the MEJT resistance from yesterday. We also have a wall into the close. It's all negative stuff, but if you gap up, then this isn't going to play out. As I pointed out in yesterday's video, we have almost all we need for a significant top here. What remains missing is confirmation of yesterday's reversal. The odds favor gapping smartly at tomorrow's open. We have a great setup for gapping down smartly tomorrow, forming the right stilt of the diamond on stilts pattern. And if that happens, there should be significantly more downside in the days following. It doesn't have to come in a straight line, but that should confirm the top and give us much lower targets on the downside. I expect us to know at tomorrow's open if that's what happens. That's what I'm looking for. If it doesn't happen, I'm not going to risk any money at this time. I don't have a plan for the rest of the day. I might get one tomorrow, but as far as right now, if that doesn't happen, I'm going to have to get my eraser out and plan something else. And when I was younger, I used to anticipate this thing and take a position overnight. Now that I'm older, I wait for the confirmation first because these things don't always confirm. You've got the setup, you have everything you need. All you have to get is follow through. We don't have it yet, but if we do, there should be plenty of times to get active on the short side. So it's a pattern with the early high, looking for the strong likelihood of a gap open. We complete the diamond on stilts. Might not go down in a straight line, but I think there'll be a lot more downside coming, and possibly 200 handles-ish from the high. But until that happens, you can keep your powder dry, because trying to call tops in a market like this can be dangerous. And that's today's call.